What has been the main focus in managing the Canadian equities pool since the crisis started?
Since the crisis started, we ascertained that all the companies that we own will be able to survive it. Even before the crisis, and based on our process, we positioned the portfolio to companies that have strong balance sheets with either a net cash or relatively benign debt metrics. Since the crisis started, we also verified that all of the companies have sufficient liquidity beyond the cash that they have at hand, which they all do. In addition, we also high-graded the portfolio when opportunities arose. High grading is replacing existing holdings with other companies that we believe have superior characteristics. We always would like to hold the best company in any given sector. However, sometimes such companies trade at very high valuations. A crisis usually gives us an opportunity to purchase such companies at much more reasonable valuations. An example of high grading is when we sold Transcontinental and replaced it with Winpack. Winpack is a Winnipeg-based packaging company that specializes in rigid and flexible packaging. Some of the company's more prominent products are plastic trays, flexible packaging of baby foods, pills packaging, and more. We've been following Winpack for a very long time. However, since this is a very high quality company, it always traded at fairly high valuations. This crisis gave us the opportunity to initiate our position at a very compelling valuation. There are several things that we liked about this company. First, it has a net cash of $392 million US. Second, this company operates in the fastest growing segment of the food packaging industry. Third, since the company manufactures its own plastic film, the company generates very high margins, approximately 18% operating margin. Fourth, since the company's products are so specialized, its contracts allow it to easily pass on any cost increases, even albeit with a lag of 3 months. This company usually traded at a multiple of 18 to 20 times PE. However, during the crisis, the stock dropped to a PE multiple of 15 times, which is where we made our initial purchase. Last, we believe that the company has a very strong management team. In the last couple of years, the company made only relatively few small acquisitions. Something that we liked was management's statement that the few acquisitions that they made was not due to lack of opportunities, but due to extreme valuations. And as shareholders, we always like a management that is thoughtful and strategic in its acquisitions and puts returns ahead of growth just for the sake of growing.
What was one of the industries that has experienced a lot of stress due to the COVID-19 crisis?
One of the hardest hit industries from the global containment measures related to the coronavirus has been travel and leisure. As you may be aware, air traffic is also grounded globally, and Air Canada is no exception to that. Now, Air Canada is one of the holdings of our global equity portfolio and our Canadian equity portfolio. And that stock has come down quite a bit on these various measures. For comparison, the TSX is down 18% year to date. The MSCI Equity, the global benchmark of stocks, is down around 11% year to date in Canadian dollar terms. Air Canada, on the other hand, is down 60%.
Why did you originally buy Air Canada?
We purchased Air Canada in 2018 as it met our investment process and our investment philosophy. In particular, the things we liked were, number one, its strong market share in terms of domestic and international air traffic as it relates to Canadian passengers. Number two, their intelligent use of the 6 freedom rights. Essentially, what they do is aggregate passenger traffic from smaller tier US cities, bring them to their hubs in Toronto and Vancouver, and then fly them on to Asia and to Europe. Number three, management has been also great in executing their operational turnaround of the business. This includes cutting costs within the business, reducing the financial leverage, and renewing the fleet, which in itself leads to lower fuel costs and lower emissions. Now, I was mentioning about financial leverage. One of the interesting aspects is that it has one of the best balance sheets amongst the large peers in North America. So one of the metrics we use to measure financial leverage is net debt to EBITDA. And when measured on a trailing basis, so when in looking back, Air Canada has a trailing net debt to EBITDA of 1x, which is quite healthy for its industry and for the airline itself relative to its historical operations. So we were able to get Air Canada stock at very reasonable prices back in 2018, and we have held it ever since then. We had great returns from the stock, and unfortunately, until this crisis hit.
What are you doing with this stock now?
While the ride down with the stock in the portfolio has not been fun, we continue to own the company because we believe that it meets our investment criteria. This is mainly because we do not believe that this current situation of extended lockdowns is a permanent one. As and when these lockdowns are lifted, we believe air travel will resume gradually, and with that, Air Canada's business will resume. Now, people may associate Air Canada with its cloudy history, wherein it required a government bailout for survival in the past. However, the Air Canada of today is dramatically different, and we do not believe that they need a government bailout for survival. Just let me give you an example. Air Canada has $5.9 billion of cash on its balance sheet, along with an additional $1.4 billion available from their lines of credit, plus more related to unencumbered assets that they own. So with this, we believe Air Canada can easily survive a year or more of extended lockdowns as they've cut costs dramatically. This is significantly better than many of its peers, if not most of them. So for that reason, as and when Air Canada stock got to certain extremes, we added to the stock and we brought it into the portfolio. And we believe that as and when these lockdowns are lifted and the fear factor abates, Air Canada stock will re-rate upwards.